Hi everybody, this is Martin Mason with Rate 1 Financial. Welcome back to Mortgage Mind. Here we are, new Mortgage Mind video, and we just finished our 20 tips and tricks, and what we're going to do today is do a recap of all 20. Number 1, you can increase your borrowing power if you have a payment on your credit report that you can pay off in less than 10 payments. Number 2, omitting cosigned debt. Meaning, if somebody else makes a payment of an account that's on your credit report and you can prove that they've been paying it for 12 months, you can most likely omit that debt and help you qualify for more. Number 3, omitting business debt. If you're a business owner and you have debt on your personal credit report that your business can prove has been paying that debt for the last 12 months, you can omit that to help you qualify for more. Number 4, credit enhancements. Did you know you can get negative things on your credit report permanently deleted? It's not the easiest thing to do, but you can call a creditor and see if they'll do it as a one-time courtesy, which will help your credit score and that'll help you borrow more money. Number 5, inheriting good credit. Did you know that you can add yourself onto somebody else's account that already has a good credit history for that account? For example, your parents' credit card, you can add your name if they're willing to their account. It'll help your credit score, which will help you get a better loan. Number 6, generating funds for a down payment. You can sell personal assets like cars, art, a gun collection, and use that money for a down payment. Think about that. Number 7, you know you can get down payment money by borrowing money from your 401k or IRA retirement account, and you can usually do it in a way where you don't have to pay any early withdrawal penalties or taxes on it if your IRA or 401k allows you to borrow from it. Number 8, there are loans out there that will allow you to finance home renovations like Fannie Mae Home Style Renovation and the FHA 203k loan. You can actually buy a house and get a loan to buy it and fix it up. Number 9, did you know that you can actually use assets to help you qualify for a larger loan? If you have a significant amount of assets, we can actually generate an income stream as you deplete those assets, and that income stream can be added to your regular income to help you qualify for a larger loan. Number 10, using rental income to qualify. Did you know that you can actually buy a duplex, triplex, or fourplex, live in one unit and rent those other ones out, and that rental income you're gonna get from those other units you rent out will actually be added to your regular income to help you qualify for a larger loan. Number 11, getting qualifying help from friends or family. You can actually get down payment money as a gift from a friend or family to help you get a better loan, put more money down. You can also have one of those people be a co-signer on that loan to help you qualify for a larger loan with their added income. Number 12, using seasonal income to qualify. Seasonal income is income you get from a job that you only work certain parts of the year, but you have a 2-year history of working at it and you can prove that you're gonna continue working at that job for the next 3 years. Seasonal income, you can use it to qualify, help you get a better loan. Number 13, you can get rid of those ugly tax liens that show up on your credit report which affect your credit negatively. IRS made a rule that if you owe less than $25,000 and you actually set up a payment plan with them, they'll actually remove that tax lien from your credit report, which should boost up your credit score, and help you qualify for a better loan. Number 14, qualifying for a loan as a union worker. For example, if you're an electrician or an actor and you're part of that union, you can qualify for a loan as a self-employed person, even if you're not working at the time, because you can show a 2-year history of the jobs that you've been getting through the union, and they'll take that average as income to qualify. Number 15, mixed use properties. You can actually get a regular Fannie Freddie loan or a VA loan on such a property. What is it? It's a property that has a commercial component and a residential component. So if you're a business owner and you need a commercial office to operate your business out of, and you want to live right next door in the residential part, that's a perfect situation to get a loan for a mixed use property. Number 16, job transitions. Don't think you can't close on a loan if you're in between jobs. If you have a start date on the new job that's going to start within 60 to 90 days after you close escrow or after you get your loan closed on your house, you can actually use that future income to qualify for the loan. Number 17, home repairs after escrow. Did you know that if you're trying to buy a house and the lender tells you you got to fix this and this and this on the house and the seller's not willing to fix it, that you can actually close on that purchase and make those repairs after escrow closes once you're the homeowner, as long as those repairs are not too complex and don't cost a lot of money. Number 18, seller provided financing. Did you know that you can get a loan from the person selling you the house if you can't get the loan yourself that you need to buy the house from a bank. Number 19, delayed financing. You can buy a house all cash, meaning no loan, and the minute you close escrow, you can turn around and apply for a cash out refi to get most of that money back. Number 20, last one. You know you can get a loan for a manufactured home or mobile home. Yes, you can. Fannie, Freddie, FHA, VA, all will give you loans on certain types of manufactured homes. Great, that was it. That's our recap. I went through each one very quickly. If you want to learn more specifically about any one of these tips and tricks, go to our past videos and go to the one for that topic. It will break it down much more. Thanks again for tuning in to another episode of Mortgage Mind. If you like what we're doing, please like and share with your friends and family. Have a good one.